Hello, everyone, and welcome back to the world's best investing podcast. I think that if you're one of the people that believes we are in an AI bubble, you have to go and carefully read Amazon's Q3 2025 earnings call transcript, because one single data point is so revealing. And apart from AWS growing at 20% now on a massive revenue base, which obviously shows that big numbers are not a reason per se to stop thinking, which happens as soon as you make nonlinear assumptions. You end up getting to big numbers, like Palantir becoming a $20 trillion company, and that abruptly halts the thought process of the average investor. But look, focus on this. Amazon customers are 60% more likely to buy something when using Rufus, which is Amazon's AI shopping assistant. Rufus daily active users came in at 250 million now, which is up tremendously. And monthly active users of Rufus are up 140% year over year. Interactions are up 210%. What does this mean? AI is actually accelerating value creation processes for Amazon. You are literally 60% more likely to buy if you use this thing. Then across the business, you see how AI is facilitating stuff for every single stakeholder in the Amazon platform. So as a seller, it actually makes posting things, products that you want to sell a lot quicker. And whichever way you look at it, through the earnings call, it's just accelerating the value creation process. This is happening across the board for every single business. And one thing is true, and I said this in, I believe it was yesterday's video. If AI capabilities are doubling every 6 months, and this is paraphrasing Microsoft CEO Satya Nadella from a few quarters ago, maybe even from a year ago. So by the way, this could possibly be accelerating now. In order for capabilities to increase 100x, you only need 3.5 years. It only really has to double 6 times for something to go up 100x. That is the nonlinear underlying trend that's driving everything. So when you have stock prices increase very quickly and they do so disconnected from fundamentals, then that's a bubble. But if you have value creation processes evolving in tandem with AI capabilities, and therefore earning power in the abstract increasing exponentially, and stock prices too, then you don't have a bubble. So the concept singularity scalar, which I've been talking about for a long time, and it perfectly applies to Amazon, it perfectly applies to Palantir and Duolingo, which I think everyone is getting very emotional about. And that's usually, by the way, when the biggest opportunity arrives. It so happens that these companies have an absolute data advantage. They have more and better quality data in their respective domain of operations than anyone else. And so as you have new AI models come along, from the open source, really, and as the capability doubles every 6 months, the value delivered to customers per dollar spent on their behalf for these companies doubles every 6 months. So this is true for Amazon. If you look at the conversion rate for Rufus, and then, for example, customers spent twice as much time talking to Alexa Plus as they did talking to Alexa. So just the writing is on the wall everywhere. If that is true, and by the way, I've never seen anyone address this logic directly. If that is true, then the earning power of these companies is set to increase by 2 orders of magnitude, so 100x, over the next 3 to 4 years, assuming that the actual underlying process doesn't accelerate. And then AI models double their capabilities, not every 6 months, so every 3 months, in which case it could happen in a year and a half. It sounds incredible. It sounds crazy, but the logic is there. What happens is that human minds are not made to understand nonlinear processes. It's too much. It's simply too much for the average person to process this. It's mind-boggling for me in 2 ways. The fact that it seems impossible to us as humans. 2, it's actually happening. 3, 99.9% of investors are just not capable of addressing the logic. So whenever I say this thing has 100x potential, or this thing is going to grow extremely quickly, or whatever, it's, the numbers are too big, 100x, too much, clickbait, etc. No single person, 99% of individuals that I've come across online simply cannot address the logic. And it's astounding to me. It's perhaps even more shocking than the actual underlying drivers of value creation processes. I don't understand why there are not more individuals, but it's just shocking to me because the divergence between value creation processes and then society's ability to understand them is widening. It was already very wide a decade ago, already has been. That's why you can make money in the stock market if you study businesses in depth. But then it's just getting wider and people are blissfully unaware about it. And we're seeing basically AI replace people in their jobs. Actually, funnily enough, Andy Jassy said that the headcount reduction they just went through has nothing to do with that. But if you talk to ChatGPT, it's increasingly a better maths teacher, it's increasingly a better therapist, a better friend than sometimes than many of your human friends and so forth. And the discrepancy is mind-boggling. It makes me feel like we're living in a kind of sci-fi movie. And I think we are. I think we're moving towards a Star Trek kind of future in an accelerated manner. Look at the numbers. Look at the written form of the update. The logic is there. I would like to see someone addressing that in the comments and saying, hey, maybe you're wrong because of this and that, attacking the logical construct. But it's just, I'm not coming across any of that. Meanwhile, obviously, stock prices continue to go up exponentially, but they're tracking fundamental value creation processes. So we have Palantir earnings next week, and I just think it's accelerating. If you look at all the mentions customers did of Palantir in their respective earnings calls, they were all talking about how this thing basically does magic. And the same is true for Palantir as is for Amazon and Duolingo. The power of their actual platforms just doubles every 6 months. So if you go back to Palantir, the reason free cash flow per share is going up exponentially, which is what the market is pricing in now, it's because as AI capabilities double, basically the time to value shrinks proportionately for Palantir customers. So there you have AIP, which just facilitated the deployment of Palantir's digital twins. And then the actual value the platform delivers goes up 2x. So AI capabilities compound the business across those two primary drivers. And so the result is nonlinear. That's why it's growing so extraordinarily quickly. And that is what you're seeing across the economy. That is why Capex continues to make sense. So Amazon actually deployed 3.8 gigawatts of compute capacity year over year. They're planning on installing another gigawatt just in Q4 2025. And they plan on doubling capacity once again by 2027. And here's what Jassy said, which I think is so much more valuable than what random commentators say. And by the way, potentially including myself in your eyes. But here's what he said. You're going to see us continue to be very aggressive in investing in capacity because we see the demand. As fast as we're adding capacity right now, we're monetizing it. It's still quite early and represents an unusual opportunity for customers in AWS. So what I continue to see here is just value being delivered. So AI Capex has a causal relationship, a direct one, with incremental value delivered to end customers. You didn't see that in 2001. The foundations for the internet were being deployed, but you didn't see such an aggressive, mind-boggling causal relationship between Capex and incremental value delivered. So I don't know, like this story about being in a bubble and everything, I think this logic is just impossible to grasp for many individuals. It's really the only, or maybe they don't even try to. I've always said there's a massive cost for not reading earnings call transcripts because you don't look at the value creation processes head on, and so you don't understand what's happening. But the cost is going up exponentially as increasingly mind-boggling things are happening. I would say Amazon is probably tremendously cheap right now, and I'd say they have a massive future ahead. This is going to be a multi-tens of trillions of dollars market cap company. Obviously, if you look at the Rufus thing, the likelihood of you buying as a customer if you use Rufus versus not, it's how much is that going to increase? Is it 100%? Is every single time you use Rufus, it gets so good that you just buy something? Probably. It's getting to that kind of very mind-boggling situation. Now, with Duolingo that I want to address, I think people are losing their minds with Duolingo, but I've seen this a billion times. And I talk to a lot of people, actually, that participate in my ecosystem, and I've seen their sentiment go from very bullish to very bearish without even an earnings report in the middle, which is pretty interesting. There's a lot of data that goes around in which people, like Hames with the credit card data, which, and by the way, my respects to people that do that. There's many ways to make money in finance. But this interim data in between quarterly reports is more often than not actually leads investors to miss out on fortune creation events. It happened with Palantir. It happened with Spotify. It happened with AMD like a billion times. I've seen the stock decline 40% plus, 50% plus many times. And what's funny is people congratulate each other on perhaps being so precise. Then the numbers do actually come out as they say, and then they sell or buy and sell puts and stuff like that. Whatever. The people that did that with Palantir have missed on a 27x opportunity, which is quite extraordinary if you think about it. So I think there's nothing like being connected to value creation processes and really thinking long term. Think about Duolingo. Look, there's a lot of people online saying, I haven't learned anything on Duolingo and I've been on this thing for 2 years. Fair enough. But think about the actual underlying value creation process. If your mother ever sent you to additional math classes, or even think about your experience in school, the majority of students were essentially useless and didn't learn anything. Okay, it's like that. A lot of those people then maybe happen to be very talented in something else. I personally believe everyone has a unique talent. But if you think about in terms of isolated, verticalized learning processes, a vast majority of the students are useless and they don't learn anything, no matter how much their mothers invest in their education. It happens. So there's naturally a distribution. And then you have a few guys or girls or whatever that are really good and they learn really fast. Then you have a few people behind that have sort of intermediate outcomes. I mean, it's basically a normal distribution, right? So you could say that at least 50% of the people obtain outcomes which are pretty bad. I don't think it's actually a normal distribution because I don't think IQs are normally distributed. I think there's a lot more less intelligent people than actual intelligent people, but it's a distribution. So for this business to move forward, what they have to do is improve student outcomes per bracket of the distribution. And so if they get a little bit more people into the top bracket of the distribution and they get a little bit of the people that actually obtain nothing and they get them to obtain a little bit, and they get the people that would otherwise obtain an average outcome and then push them up a little bit, and they do so at a cost which is inferior, far inferior to alternatives in the market, then they grow. The business grows. That's why DAOs accelerate. And then that puts you in a position to have proprietary data. So a year ago, actually, Duolingo was solving 1 billion exercises on the platform per year. So they have all this data about what actually motivates people to get through the learning process. And you get that data, and therefore that allows you to use LLMs as a tailwind. So if you're a language learning company and LLMs get good at teaching people languages, that's basically a headwind. Okay, that's what I think people are not understanding. And so what's confusing about competition and value creation processes in network is they happen at the edge. They happen in a very marginal context. So remember when people were saying Apple Music and Amazon Music were going to kill Spotify, it's exactly the same thing. They didn't understand that Spotify had a marginal advantage in the UX, user experience, and then that has actually translated into an exponential advantage in adoption and shareholder returns, assuming the company is well managed, which, by the way, I think Duolingo is one of the best managed companies on planet Earth. And so what we are seeing here is a misunderstanding of the value creation processes and people not doing the work, really. Obviously, that's good for me because I get to make more money and then smart investors get to make more money. A stock, it's better to buy stocks at lower prices than at higher prices. I said this on X last week and people were having a laugh at it and quoting it and stuff. It's such a basic quote, right? But really, when people get depressed with a company, with a stock, and with no actual data in between, it's usually a sign that there's a disconnect between the price action and the fundamentals. And so it's marginal, it's confusing, but I hope that's a good summary of the value creation process. So what happens with what I think is going to happen with Duolingo is what we are seeing happen with Amazon and Palantir and stuff, is that as you have new GPTs of sorts come along, the platform gets exponentially more powerful. And so eventually, as they deploy verticals, which, by the way, last time I checked in Q2, they were growing exponentially. So chess hit 1 million subscribers. I think it was DAOs, actually, daily active users, in like a fraction of the time of anything they've seen. As they compound verticals and stuff, this platform is eventually going to birth AI tutors. So one AI tutor really that can teach anything to any human and drastically improve the average outcome for the average human at a price which you can't compete with. It's pretty obvious. It's heading in that direction, okay? But people like to get emotional, in my opinion, and yeah. So it's with everything. I think you have to really get deep into value creation processes. Even a lot of the people that I speak to that are professionals, they're not thinking in these terms. They're thinking, I don't know what the hell they do, but I mean, they're just thinking in terms of what other people say. So one thing that really caught my attention is famed investors, which I think one of them has to move to China soon. But you know who I'm talking about. A bunch of big institutional investors that the last time they were featured on CNBC, they thought the world was going to end in April, May. And now they're back on the scene saying that, yeah, okay, the market is going to do very well, but everything is ready for a blow off top. To me, it's striking that someone of that category could reach such a conclusion. Firstly, you don't know when the hell anything is going to pop. You just don't. And secondly, right now, the causal relationship between Capex and incremental value is so clear to me. So it's a little bit like, I think people just sold the bottom. It turns out we are in an accelerated value creation process scenario. It's accelerating beyond belief. There's no limit in sight to how much it can accelerate. The numbers are increasingly mind-boggling. The human limbic system is not adapted to deal with a situation of this kind. There is no guarantee that we won't see a bubble in the future, but for now, it's just too much. It's too much for the average person to process. It's really striking. The only thing that compares to this maybe that I've seen is 2020, 2021 period when the population generally lost the ability to reason for themselves. It's something like that, but worse. It's worse because I feel like we're living in a sci-fi movie, and the more I look at it, the more the logic makes sense, and so the discrepancy is just too big. Anyways, going back to Duolingo, if you look at if you actually dig deep into the history of the company, DAOs haven't grown in a straight line. DAO growth, the very impressive DAO growth, is a direct result of the company's extraordinary ability to A/B test. And so this last growth spurt that we saw was the result of them identifying a metric which was very counterintuitive and understanding that if they nailed that metric, growth would ensue. And so it's a cyclical process. We see it many times with companies. We saw it with Netflix in 2022, and we just see it all the time. So what happens is that investors have a tendency to extrapolate. When they see rapid growth, they believe it's going to grow like that forever. And when they see a deceleration, they start to assume it's going to decelerate like that forever. But really, the best predictor for long-term financial performance, and we know that stock prices tend to track free cash flow per share over the long term, is organizational culture and generally qualitative properties of the sort. And so I see no meaningful degradation of that in Duolingo. If anything, I see them just getting better. And so what I think is going to happen is that people are going to go very emotional into this earnings report. God knows what's going to show up. But generally, I think over the long term, this company is going to continue compounding free cash flow per share at a rate which is going to be mind-boggling. When I say Duolingo is going to be the next Palantir, I really mean that it's the next company we're going to see compound free cash flow per share at a level which is going to make value investors cry. It's going to make shareholders very happy, in my opinion. And then it's going to confuse people a lot. Like I think we're going to see a massive bifurcation in society between those that are invested in AI and those that are not. And it actually worries me. I think many of us are going to do very well, but I find that as time goes by, I find myself increasingly unrelatable to a growing part of the population. So when it comes to life, someone said you can actually buy friends if you make more money. It's increasingly like I'm living in a different world. I know that's happening to a bunch of you that I talk to. It's a good problem to have. I definitely don't want to be on the other side of the equation. Screw that, and so forth. So guys, I hope that was helpful. If you enjoyed this video, could you please share this with one friend, as always? If you do so, then the podcast grows. And as you know, my content is for free. So the only way this can grow is with your help. So thank you very much in advance. Thank you very much for being here, for subscribing, for your likes, for your comments, for sharing my work. I really appreciate you guys. I love this job. I wasn't actually going to work today, but the Amazon earnings report was just too interesting and so insightful to what I think is coming. So guys, thank you very much for everything. See you guys next time and take care.